the last edition for the week. Welcome to Business Morning. I'm Chimeze Obi Iwago. The Central Bank of Nigeria has postponed the May 2020 meeting of the Monetary Policy Committee, earlier scheduled for Monday and Tuesday, May 25 and 26. This is as a result of the declaration of Monday and Tuesday, May 25 and 26 as Eid al-Fitr holiday. The meeting will now hold only on Thursday, May 28, 2020. Now, the CBN says it has put in place all necessary machinery for the meeting to now hold for only one day on account of the ongoing COVID-19 national lockdown and to align the meeting with extant rules of the Presidential Task Force on COVID-19 and advisories from other relevant agencies. In the meantime, the April inflation number came in yesterday with the consumer price index rising to 12.34% year-on-year. This is 0.08% points higher than the rate recorded in March 2020, which was 12.26%. Increases were recorded in all divisions that yielded the headline index. On month-on-month basis, the headline index increased to 1.02%. In April. This is 0.18% rate higher than the rate recorded in March 2020, 0.84%. Now, the urban inflation rate increased to 13.01% year-on-year from 12.93% recorded in March 2020, while the rural inflation rate increased to 11.73% in April 2020 from 11.64% in March. Now, the composite food index rose to 15.03% in April compared to 14.98% in March. The rise in the food index was caused by increases in prices of potatoes, yam and other tubers, bread and cereals, fish, oil and fat, meat, fruits and vegetables. Well, let's get the first word on this from Tilewa Adebajo, CEO, CFG Advisory. Good morning, Mr. Adebajo. Thank you for joining us.
Good morning.
Now, the April inflation came out 12.34% from 12.26% in March, just 0.08% higher. One would have expected to see a higher figure. Did this come as a surprise to you?
Not really. I think it's important for us to understand the dynamics of our inflation. Are we looking at cost push or demand pull inflation? What are the factors that are putting pressure on our prices? It's important to note, first of all, that you will notice that one of the key factors that drives inflation in Nigeria is more of the cost push inflation with the prices of petrol. Don't forget that energy prices have come down. The fuel prices have reduced significantly from about 145 to about 120. So that, I think, is a fact, something that we need to factor into the equation when we take a look at the inflationary numbers. But what is worrying is the fact that if this run rate continues at close to 1% every month, by the end of the year, we're looking at close to 19% inflation. So that is really where the concern is, that if this continues to go up, then you can begin to see some sort of crisis by the end of the year, especially with the predictions of contraction of about 3.5% in GDP.
All right, you did note that the price of petrol came down during this period, and that was a significant thing that actually happened. And we know that transportation cost is the major component of inflation basket. Perhaps this, of course, reflected to the numbers that we saw. Now, before the lockdown was announced in March, there was a lot of speculative and panic buying, people stocking up food items, and that saw the price of some food items spike. Shouldn't that have reflected as well in the numbers more than what we are seeing?
That period was maybe for a very short period, and I think that once people realized that the markets would be open, the speculative nature of that situation, I think, was abated in the sense that they announced a lockdown and they also announced that the markets would remain open. And I think people had an opportunity to buy. And I think the movement of essential services and movement of food trucks into Lagos was not restricted. So there was access. But again, we need to now talk about the issue of demand. What is actually driving this inflation? Is it the demand or aggregate demand? When you have a situation in Nigeria, when you have 100 million people in poverty, then their purchasing power is extremely low. So it's very difficult for us to spend our way to say out of this situation and begin to see the impact of consumer spending on inflation in Nigeria. What tends to drive inflation in Nigeria more is the costs in terms of the pricing, the cost push, the inflation. And you can see that the prices came up marginally. So the trajectory definitely is on the upwards, and I think that is really where we need to watch. And I think what is important to see is that the impact of the lockdown, I think we will now begin to see maybe at the end of May. By the time we take a look at May and June numbers, we'll begin to see the impact, because these are lagging indicators, as you know. They're not leading indicators, lagging indicators. So we're looking at the aftermath of the effect. So I think for us to be in a better position to understand where we're going, we need to look at numbers for May, and we'll see numbers for June. But what is clear is that the inflation trajectory is clearly upwards of spiral.
All right, now the MPC is next week, Thursday. The GDP number, of course, is expected to be released on Monday, or at least before the meeting. How do you think these data, that's inflation and, of course, the GDP numbers, will influence the decision of the Monetary Policy Committee?
First of all, let's make the condition that Nigerian economy only grew at 2.5% last year. That is way down in terms of our population growth of 3.5%. And that is what accounts for our poverty situation of 100 million people. Our economy is not growing as fast as our population. And I think that that is where the dilemma is for this government. So let's put that on one corner. The next issue now is the fact that what is the MPC going to do about this? And what sort of GDP numbers are we expecting? Clearly, I think for the first quarter of this year, we don't expect GDP numbers to be anywhere close to 2%. I think that is really, if we get to 1.5%, we're very lucky. We might actually be negative for all you know, but clearly the numbers are not going to be anywhere close to 2%. And it is clear that by the end of the year, we're going to be in a recession, and our economy will contract by at least 3.5% from what predictions are. Now, what monetary policy, in my own opinion, has become irrelevant in Nigeria. The Monetary Policy Committee, over the years, have not really moved their rates, and they have not focused on cutting rates to spur growth. They haven't really focused on growth. So you find out that at the time where they were supposed to have cut rates to be able to spur economic, they held on to rates and they were tightening. And basically now, monetary policy has become totally ineffective. It doesn't matter what you do right now in the situation where we are, monetary policy is not going to work anymore. It has become ineffective as a tool for managing the economy. So what the banks are doing now is focusing on the reserve ratios of banks and beginning to try to force the banks to lend and change the dynamics of the lending ratio. Again, that started a bit too late. So I don't really see anything the monetary policy are going to do next week. They're going to maintain their rates the way they are, and they're not going to make an impact. The key issue that we need to work out, as I've said earlier to you when I was on this program the last time, is the fact that our exchange rate system is flawed. We have a multiple exchange rate system, and we have a static exchange rate mechanism. We have to move to a single window exchange rate system, and we have to put in place a dynamic system to manage foreign exchange with one window.
All right. Thank you very much, Mr. Tilewa Adebajo. Let's wait and see what happens next week. Thank you for your time. Tilewa Adebajo is the CEO of CFG Advisory. And while businesses count their gains and losses and try to rejig things as a result of the COVID-19 pandemic, one other sector that has its story to tell as to the impact of COVID-19 is the real estate sector. With a drop in income and loss of jobs, very little interest in acquiring houses will be shown by property buyers. Also, the movement restrictions and social distancing will adversely affect construction activities nationwide, with organizations and individuals trying to apply safety measures. But let's hear from a real estate practitioner and the Vice President, Lagos Chamber of Commerce and Industry, Benga Ismail. Thank you very much, Mr. Ismail, for joining us.
Good morning, Jose. Thank you for
Good
having me
morning.
here.
Now, as practitioner in the real estate sector, how would you assess the impact of COVID-19 on the real estate?
Thank you. In Nigeria, the impact is not directly obvious. We wouldn't feel it immediately, unlike other parts of the world. Why do I say this? If you look at the interaction with real estate in Nigeria and compare it to the other parts of, the developed parts of the world, basically, if we look at the UK, US, even some parts of Africa, we find that
perhaps where mortgages work.
Where mortgages work, where your involvement is a percentage of the amount of money you're going to do. The first structural thing you even look at in terms of tenancy is in Nigeria, we pay 1 year in advance, 2 years in advance. So you don't have a quarter-by-quarter situation that they are filling out there. So right now, what happened is that from the period of the lockdown, you don't get to feel anything. But by third and fourth quarter, you can maybe probably start seeing how this has affected the real estate sector in Nigeria. You've mentioned about job losses, job cuts, disposable income. Now, these things will start trickling into the economy.
So people won't be able to pay their rent, people won't be able, and those that would want to buy a house or something.
Buy a house, to put deposits down, all rethinkings will be done, effectively. We're still not sure where the monetary issues are going to go to be able to see if lending will continue in whatever sense to this particular sector. So we are yet to see some of these things going on. And even the inventory, meaning that the developers have put buildings out there. Who's going to take it? Who's going to rent some of this space? Our space is going to be still in demand in the same manner it was prior. We have wait periods of leasing and selling. 6 months. This was before COVID. We're waiting 6 months to get someone to come and take a decision. Now we're thinking, is it going to be 12 months? Is it going to be longer than this? So the immediate impact will soon start revealing itself. Unlike the global sector, where you see companies saying, our quarter rent has not been. It's 84%, it's 90%, it's 20%. Next quarter, we want to see whether it's improving or decreasing. And people are asking for moratoriums in payments of rent globally, as we've heard. So those are the sort of things
are they going to apply that to perhaps here in Nigeria?
Well,
if you have to pay your rent and you tell your landlord, oh, no, you have to give me a moratorium.
Because of our structure that we pay yearly in advance or 2 years in advance, effectively, it's only those whose rents are coming due in this particular quarter and next quarter may be having those discussions, because businesses may have been affected, and also human resource, staff also may have been affected. So those decisions will be taken.
Now, there are other people who must have actually taken mortgage, to get their houses, perhaps to build or to, buy a house. Are they likely to also get a moratorium?
Yeah. Let's get something clear. The mortgage debt in Nigeria is not anywhere so fantastic to affect a lot of things. But for those who have mortgages and who probably are in the risk area of losing their jobs, definitely they will have discussions with their lenders as to what to do if that happens. And I think that those mortgage lenders have to actually listen to this plea when it does come. They would have to think about it and what do they do in terms of, because the COVID situation is a force majeure. Nobody expected it, nobody thought about it. And people are being forced to make decisions that they did not plan to make.
Now, during this period, there was a lot of conversation around palliatives, and incentives for various sectors, agriculture, healthcare, and nothing was mentioned in the real sector. Is it because perhaps you're looking at the fact that, okay, the effect is not being felt for now or something?
No. Interestingly, you see, real estate has been taken for granted by everybody. So you can forget it because you live in a house, but you just take it for granted that the house is always going to be there. The warehouses for storage, for manufacturing, the buildings for offices. Even the isolation center is a building, so to speak. But you forget the role it plays. So government effectively doesn't realize that, what do we do for this sector? All the inputs to put the buildings in place require materials. So when government is thinking about sorting out different sectors, they need to look at areas of where your building material is coming from to the developers. the interest that have been given to certain developers and certain contractors who are going into these areas, what do we do effectively? Because they will be affected. They will not be able to deliver on those promises if they get affected with any of those variables that have been affected because of this shutdown, lockdown, and the effect of having a situation where nobody can interact anymore. So I think government should look at, and if you look at the stakeholder situation in real estate value chain, from acquisition to design, construction, to all the areas that are connected, there must be a way, government, from taxes to concession to levy, suspension, to everything. Government needs to look at it, not directly giving money into somebody's hands, but the things that add onto cost must be looked at. And those are the areas I think they must.
Well, I'm sure you're following the inflation trajectory. We saw
Yes.
the April inflation, 12.34%. And of course, obviously, a lot of people believe that inflation will continue to climb. How do you see that impacting the real estate sector?
Well, that has a direct impact. I've just mentioned about building materials. If the cost, if inflationary pressure goes into the building material inputs side, of course, end product is cost of housing. It's going to go up. The landlord also is directly affected. He's going to increase his rent because he too has to go straight to the market area and purchase goods. He would transfer it to his rent. So rentals might go up. So all of those things are all interrelated. Once inflation index starts going up, and the way we even do rent reviews is based on CPIs and all of those, the retail price index, inflationary index, all of those things are looked at. So once that starts going up, it's going to pull up all those other areas like rent and...
All right, we just have to be forward-looking. COVID-19, of course, has come and it will go. So what is the outlook for the sector in the short, to medium term? Is there a light at the end of the tunnel?
Well, I'm always an optimist with real estate. I strongly believe real estate will always overcome every pressure thrown at it. If you remember 2008, where the crisis in the global world, which was real estate driven, but it turned around in 3 to 4 years, and now it is now the wealth, the store of wealth for most people. So just like that, COVID it's a temporary situation. It's a health crisis, but because of what I've now termed and which I borrowed the word coronomics, which effectively means that because of coronavirus, we're going to have economic impact. In the short term, asset values may drop. So for any investor, this is the time probably to go in when the prices are dipping in, because when it comes out, it's going to come out rapidly and effectively return the value that it may have lost in that time. So nobody should panic. Nobody should run away and think, oh, things are going crazy, we cannot make a decision. But stay focused, invest in your real estate continuously as you plan to do it, and all will be well.
And what if it's a new entrant into this investment?
Oh, go into the deep end. What I'll say is don't hold cash. Keep enough cash that can take you day by day, but invest in an asset that will give you value tomorrow.
Now, I'm sure you have, an association. So how do you come together to actually drive the government to actually support this sector and, of course, encourage perhaps new people that would want to invest into this sector?
Well, yes, of course, through the LCCI, which is one of the associations that are strong in advocacy. The various stakeholder forums, stakeholder discussions that also always identify the areas where government should intervene. And we all know in terms of real estate in Nigeria where those issues are. One of the major issues are in terms of regulatory issues. So it is impacts on first time coming in to buy a property, even someone like me, you, and every other person. We'll have to make sure that where we're going to invest is secure. All right? So those are the areas, regulatory and statutory, because Untitled, that's one. Finance, access to mortgage, access to real estate loans, areas whereby the government should assist to make sure that we have these funds available at the same time. Interest rates, now, interest rates is not a government issue. It's a dynamic of supply and demand of available funds. So deepening the sector and making it more structured to effectively protect the funds of those who are providing such long-term and short-term funds. Those are the areas we keep speaking to government to make sure that an enabling environment is created.
All right. Thank you very much, Mr. Ishmael, for your time. Winga Ishmael is a real estate practitioner and the Vice President, Lagos Chamber of Commerce and Industry. We'll take a quick break, and when we come back, we'll look at the film and entertainment industry. That's another sector suffering from this COVID-19 pandemic. Just stay with us. The arts, entertainment and recreation industry grew by 5.54% in the fourth quarter of 2019, contributing about 0.23% to Nigeria's gross domestic product in 2019. Now, the Nigerian film industry, the Nollywood, is globally recognized as the second largest film producer in the world. The industry is a significant part of the arts, entertainment and recreation sector. But with the advent of the coronavirus, the narrative may have changed as concerts and live shows promoters, filmmakers, and theater and stage plays have either been cancelled or postponed due to the pandemic and the attendant effects of the lockdown. Now, this translates to investment losses across board, leaving billions of naira unaccounted for as COVID-19 takes a toll on the economy. It is one of the priority sectors identified in the Economic Recovery and Growth Plan of the federal government of Nigeria, with a planned $1 billion in export revenue by 2020. Nonetheless, existing challenges will have to be addressed to take Nollywood to the next phase. And joining me now to give us a clearer picture on what the sector is like now is a filmmaker and an actor, Patrick Doyle. Thank you very much for coming on the show. Good to have you.
My pleasure.
Right. Now, could you paint a picture of how this COVID-19 has impacted the film and entertainment industry?
It's very difficult to put a figure on the losses to the motion picture industry. But there are areas of the motion picture industries where it is easy to extract empirical data. And one of such areas is the box office, because we have had cineplexes all over this country, and they have an integrated system of monitoring box office take-ins. They, for instance, have lost, for every month that they've not operated, they've lost at least 500 million naira. That is the average monthly take-ins for box office. But if you add on to that, the fact that when you go there, you buy popcorn and a soft drink, the concessions have lost another 500 million naira. So 1 billion naira a month is being bled from just the motion picture exhibition arm of the entertainment industry. So far, the whole of April, absolutely no earnings, 1 billion lost. The whole of May, it's looking like absolutely no earnings. So about 2 billion naira has been lost. The box office alone accounts for 6 trillion naira per annum in terms of what it brings to the table to the entire matrix of the entertainment industry. So that has all gone down the drain, and is looking like in the foreseeable future, it will continue to hemorrhage that way.
Now, as a major player in the industry, what changed for you given the impact of the COVID-19?
A lot of things changed because, as I said, the only aspect of the industry where you can extrapolate empirical data is in the box office. But down the line, the multiplier effect of that is that, for instance, I was in the middle of acting in a movie, and that production had to pack up at the beginning of the lockdown. There were 3 other movies that I had been contracted to take part within this period of the lockdown. That is a loss of earnings, personal earnings to me, in the region of nearly 3 million naira. Those are personal earnings losses to me. And if you multiply that against the other people who are in this industry, the personal losses to people who are in the value chain of the motion picture industry it's unspeakable.
Now, I guess in the whole pandemic thing, some sectors, of course, are benefiting. We have the telecom sector, of course, that are benefiting because a lot of people leverage on technology, online, and all of that. How do you think this also has benefited the entertainment industry? We have the Netflix, we have Roku. How do you see, having people leverage on technology to also watch your show?
The downside to all of that is the fact that new productions are not being made because the protocols and the guidelines for work to commence. For instance, as I said, I have just lost out on 4 motion pictures that I ought to have been in. So if you don't have new content going into these streaming platforms, they become boring and may eventually begin to lose revenue because they thrive on a constant feed of new content. So those people, it may look like right now during the lockdown, for instance, I was locked onto my Netflix, but I have watched practically everything that there is to watch on Netflix, and I know that there are no new productions. If it had worked well, there was a James Bond movie that was supposed to have been released, and that would have been a monster box office hit. And somewhere down the line, it would have made its way to the video streaming services, but it's not going to happen because the film never got released because of the. So it's really a no-win situation for everybody in the matrix, in the entertainment matrix.
Now, a number of palliative, of course, was announced, during this period for different sectors. Were you expecting any?
I strongly believe that the exhibition, the theaters, the cinema owners deserve to be compensated for this because through no fault of theirs, this has happened.
In form of what?
They have overheads, they have salaries to pay, and they have not been able to earn a penny, one brass farthing, because nobody goes to cinemas. Cinemas have been closed. So if nobody else, because the investment is very high, the margins are very slim because of the cost of the investments. Most of the cineplexes are in very expensive shopping centers, or what they call them, malls.
Malls, yeah.
These malls. The malls too are suffering because they cannot.
And people are
you cannot expect the cineplexes to pay rent when there's been no income. So it's a very, very dire situation for that category of people. For people like me, who have lost income, because these are things that I ought to have. These are monies that ought to have come in as revenue for me, but because of this lockdown, I cannot earn. I participate in a sitcom, a daily sitcom that airs 5 days a week. We haven't recorded in months. And if we don't record, I don't get paid. And if we don't record, they don't have anything to send to the streaming service or the cable television network. So it's very dire. I know that they've set up a committee to meet and make recommendations to government about how to, for want of a better word, mitigate the devastating effect of this lockdown. It will be very difficult to come up with a list of criteria on how and who should be compensated, because I have just told you that I lost 3 million naira. I might have been lying. So it's very difficult.
But I thought you have an association. You have records.
There are guilds. No.
Yeah.
It's not so. I am contracted as an individual to participate in a movie. I have negotiated a fee for my part in that movie. That has been lost. But there is no way that I can empirically prove what is lost, because, as I said, and we're thousands. So it's almost impossible to find a formula for the equitable
distribution
of whatever it is, palliative that is. But the only people that I know, for instance, the Silverbed cinema chain is suffering huge losses. Genesis cinema chain, the other young men, Film House, these are people who have expended billions of naira in investments, and right now they have absolutely no earnings. They also have salaries to pay, so people who work there are not earning. So as I said, it's a bit difficult. But what government can do for us is it give us some guidelines for opening. If you're opening churches in the not so distant future, churches are even places where there are masses of people. So whatever guidelines you issue to churches for congregations to come together, those guidelines can suffice also for the cinemas, which attract much less.
And what about you
footfall.
actors?
Then again, we need the guidelines for us to work. We need guidelines for us to begin to present new content. And I know that, for instance, that my dear friend, Mr. Fred Amata, who's the president of the Guild of Directors, and the Emeka Rulers, who's the Actors Guild, I know that they have been making efforts to design a draft guideline to present to government, for government to look at. That, when I mean government, I'm talking about the NCDC, to look at and and say, all right, it is possible if you use these protocols, that your filmmaking enterprise is safe and you can start working again.
All right, now the CBN last year introduced a creative industry finance initiative where a film distributor can, for example, get a loan of up to 500 million. How much of disruption has this COVID-19 brought to this?
You just nailed it now, because even that is in limbo right now. And nobody is going to process. First of all, what CBN, you know that it takes time for the protocols to be observed even before those funds are released to the people who apply for it. So I'm not sure that anybody has actually accessed that money before this disaster set in, because it's a process. Getting a loan is a process. So I'm not sure that anybody has even accessed it in the first instance. And here we are in a situation where now people are going to be investment shy to move in that direction, because they can see what this COVID can. Who knows what's coming up tomorrow? So confidence has been greatly eroded in that sector. The music sector is also affected. For instance, the collective administration, the collective management organization for music, COSON, it did a very commendable thing by distributing some money to its members, 72 million, I think, in the middle of this. But they had been targeting to make at least 1 billion naira at the end of this year to be able to distribute to right owners. But that has been truncated now, because the radio stations, the hotels are not paying because there's nothing happening. The hotels have been closed down, and the event centers have been closed down. These are people who usually pay for licenses to use music. They can't pay.
Yeah. Okay. Aside from the issue of COVID-19, what other challenges does this industry experience?
The challenges that this industry experiences are not peculiar to the industry. We have a challenge of power. We have all kinds of. We have even challenges of being harassed by area boys who take a illegal tax. In the middle of work, your work is disrupted by hoodlums. And sometimes those hoodlums could even be officials of governments who just decide that they want to exercise their authority over you. But so our problems are not peculiar in that sense. But what makes it worse for us is that we are perceived to be doing so well. And in reality, we're not doing well at all.
Yeah, actually, the federal government is projected they could actually earn about $1 billion from export of Nollywood production. Do you think this is still feasible?
I don't know how the federal government will, but I can safely tell you that the Nigerian music industry, individuals inside of that music industry have keyed into for want of a better word, the global matrix of the sale of music through the internet. And individuals within that industry are doing extremely well, because Nigerian music is doing well around the world. And they are earning from it. And I think they're earning over 1 billion naira. But those are monies that are going to those individuals and their recording companies and their publishers and what have not. But how government wants that money to come into its coffers It's a bit difficult because nobody's selling any tangible. The sales are done electronically.
Okay.
So if I was selling, for instance, cassettes, and I want to export cassettes, you can take an export duty on the cassettes. But these are, for one, intellectual property.
All right. Thank you very much, Mr. Doyle, for your time.
My pleasure.
Patrick Doyle is a filmmaker and an actor.
I started as a broadcaster.
Yeah, broadcaster. Thank you for your time.
My pleasure.
All right, let's take a quick look at the global oil market. Prices slumped on Friday morning after China's decision to omit an economic growth target for 2020, renewed concerns that the fallout from the coronavirus pandemic will continue to depress fuel demand in the world's second largest oil user. Brent crude fell $1.56 to $34.50 a barrel after gaining nearly 1% on Thursday. West Texas Intermediate crude dropped by $1.79 to $32.30 a barrel, having gained more than 1% in the last session. China's National People's Congress kicked off a week-long meeting on Friday with the government saying it omitted the 2020 target while pledging to issue 1 trillion yuan of special treasury bonds to support companies and regions hit by the pandemic. Both Brent and WTI are heading for a fourth week of gains as more evidence emerged that fuel demand is recovering as countries ease business and social restrictions imposed to counter the coronavirus pandemic. Traffic flows in Berlin and Tokyo have rebounded, while in the United States, the easing of restrictions in many states has supported demand for gasoline. The upcoming Memorial Day holiday weekend typically kicks off the U.S. summer driving season. All right, for Thursday's market review, here is Temple Ashaju. Temple, the bulls managed to sustain their grip on the market.
Sure. I mean, thanks to Boa Cement, thanks to several other companies, Unilever, Zenith Bank, and all the major actors that we had in the markets yesterday that pushed up the indices of the Nigerian Stock Exchange to 24,758.39 after rising by 1.25% and, of course, moderating the year-to-date losses to 7.8% and, of course, increasing further the month-to-date performance to 7.6%. We got an addition of about 160 billion naira to the equity capitalization of the stock exchange yesterday. Volume of transaction weakened slightly by some 20% decline in terms of volume, even though we know that Zenith Bank did rose by 3% plus, and of course some 57 million units of its shares, were traded, and that was the highest, the most actively traded at this point in time for volume. Value of transaction dipped by 38% yesterday, but the deals compared to 5,195 that we did in the previous trading session was up to 5,239. And of course, if you look at the sectoral analysis, everything is green. It tells you the land is green, actually. Equity markets is really green. Zenith Bank, FBN Holdings, for the banking segment, consumer goods segments also, Unilever, as well as Flour Mill was actually down yesterday. But you got industrial goods side of the market. Boa Cement was up by about 10% yesterday. Kiotics PLC, Anambra-based company that deals in cables and wire, very positive yesterday as well. And you have insurance space also very positive. Suno Assurance, which actually led some 28 other companies yesterday, had 10% and was very, very positive. Oil and gas side of the market, we got an improvement as well. Look at Ardova not moving anymore. Corn oil remained at the same position, but 11 PLC had some gains yesterday, 9.95%. And O&O was for decline yesterday. We got Jamiu Mohammed, who is the head of securities dealing now at APT Securities and Funds, joining us via phone. Jamiu, good morning. Thank you for joining us on the program.
Good morning, Temple.
So how much time do we have to... how much time do we have for profit taking? Today being the last trading session ahead of the public holiday that we have from Monday and Tuesday.
Yeah, we are trying to be positive. You have rightly said that everything is almost on the green yesterday, and this has been happening since on Monday, and we believe that the market, the positive trend that we have witnessed in the market is going to be sustainable for now because of the stability that we have in the global oil price though we have a drop yesterday just one about China issue with GDP. So despite that, we expect our market to continue on a sustainable manner to go like this in the nearest future.
It's been forecast that the GDP numbers for Q1 will be coming in any moment from now, and it's expected to be negative. When that trickles in, do you think we'll be able to have this momentum?
Yes. Do you know what I said? We are going to have the momentum is this. You know, the figure is being calculated for what has happened in the past. It's for the last quarter. The GDP is going to be calculated based on the last quarter. And if you actually see the result of those companies that they have been chipping in.
All right, Jamie, I have to interrupt now. We need to go on break. My apologies. But we'll certainly have more time for such conversations again. Chibuze.
Temple will do an opening call to London as well as the debt and currency market after the break. Do stay with us. For updates from the streets of London, here is Juliana Olainka. Good morning, Juliana. Well, Clarks is cutting 9,000 jobs. Why is this retailer taking this top decision now? Is it all about COVID-19 or there are more to it?
It is about COVID-19, Chimaze. Good morning, by the way. But considering they are a high street retailer in the UK, their troubles started long before COVID-19 hit these shores. They've been struggling with consumer confidence. Not a lot of people have been going in to Clarks' stores. And also as well, retail rates, the business rates here in Britain are pretty high, particularly for retailers who have stores outside of London. Those high streets have been pretty dormant over the past couple of years. So Clarks, they are a 200-year-old retailer, pretty familiar with most people here in Britain, especially for children's school shoes. They have made this announcement that they will be cutting 1,000 positions as they try to look forward and look to survive post-COVID-19. They have about 365 stores across Britain, and they've all been shut, of course, and they have furloughed thousands of staff. So 160 positions, they will go immediately. There are a further 700 positions that will be going over the next 18 months. They were very quick to say that they will be making a further 200 roles within their head office just because they do want to keep people employed. But they said it's just going to be too tough. There was some rumours swirling last month as well that perhaps even when some of these lockdown restrictions are lifted, that many of the stores that people are familiar with of Clarks in the High Street will be gone for good.
Well, Lloyds Bank Group investors rebelled against the lender's pay policy for top bosses. That was yesterday, with more than a third of balloted shareholders rejecting its bonus plan. What exactly is the argument here?
Well, they're not happy. Well, most of the shareholders, well, not most, actually. I think it was 36.2% that voted against this new remuneration policy that they've put in place yesterday at their AGM meeting. But Lloyds have been in hot water, I would say, for the past couple of months. In March, they were ordered by the Bank of England to rein in the pay for their top bosses so that they could help with customers in light of the COVID-19 pandemic. Earlier in the year, the Chancellor did say that he wanted banks to try and help with this consolidated business interruption loan, paying some companies up to £25 million. And a lot of Lloyds customers were complaining that they just couldn't get the money, that it was too tough and too difficult. So there was a remuneration policy set in place by the shareholders, which would take some of the top bosses' pay down from 9.5 million to a maximum of 7 million. And they were voting for that policy yesterday. It did go through, but as you said, a third of shareholders were still not happy because they said even if their pay does go down to £7.5 million per year, there were still some benefits that they could get with bonuses and other remuneration packages. So, you know, the beat goes on and on for some of the bosses in Lloyds. But they have said that, you know, since they were, you know, given the whip by Bank of England, they have started releasing some money to the tune of £7 billion to help people extend a lifeline to those who are suffering because of the COVID-19 fallout.
And of course, the UK competition watchdog is investigating package holiday firms after receiving thousands of complaints from consumers who have been unable to recoup money on cancelled breaks. What is the Competition Authority seeking to achieve by this, knowing that these firms were actually affected by the COVID-19 pandemic?
Well, you're right, Chimeze. They were affected by COVID-19, but so were the customers. If they didn't go on their holiday, then legally here in the UK, you are entitled to your money back. I think the package tour operators are supposed to be giving customers back their money within 14 days. Airlines are supposed to give that money back within 7 days. And for the vast majority of people, they have been able to receive their money, but there are about 60,000 others who haven't received their money. It's totaling over £1 billion. And they have, of course, written to the CMA, the consumer watchdog, and they have now announced via the government that they will be investigating these companies. And it's not just that these companies are trying to rip off customers. Many of them fear that because of the huge amount of people that want their money back, if they were to give it back to all of them, they would simply go bust. So what they've been doing is they've been asking some customers to maybe not accept cash, but accept a holiday voucher that they could use much later on in the year or even next year. But for many people who are just unsure of what travelling post-COVID will be like, they just want their cash in their pockets. So the communication is ongoing, the discussions are ongoing, but now the CMA have got involved. So it's likely that customers will be getting some of their money sometime soon.
All right, Juliana, we expect more update from you later in the day. And back here on the debt and currency markets, Temple is back on board. Temple.
Yep. Yes, thank you, Chimeze. Again, we had some more attention on the bond side of the markets yesterday. Of course, this is the secondary market of for the Nigerian bonds securities now. Yesterday, we saw a situation where quite a number of the papers were on offer. We had the 2050 security on offer, and of course April 2023 on offer, and they were matched by some good demands from a lot of local traders, especially those that were unable to actually participate at the bond auction the day before. We know that the 2023 paper had actually seen a decline or a rise in stop rates by 20 basis points. At the auction, and of course the 2050 saw an 8 basis points increase in the stop rates. That's the auction. The 2035 paper was on auction yesterday, was on offer rather yesterday, but we didn't see much of demand on that side. And of course, these had actually improved at the auction. We had even expected that yesterday, Thursday, after the auction, for those that were unable to participate on this paper at the auction, they will resume here. Instead, they got some offerings at these two ends, which is at the longer end of the curve and the short end of the curve. Eventually, we saw rates, costing higher, was up by some 8 basis points. Average yield rose by 8 basis points significantly. If you look at the Treasury bill side of the markets, things remain cold here. Offerings are very, very limited. We had seen interest around this particular paper, May 2021 security. Before now, that was what we saw on Tuesday and of course on Wednesday. But yesterday, it looks like that was actually on a downward trend. And of course, for the open market operations, here's what we got. There's more offer. We saw a bit of more offer compared to what we saw on Wednesday on this side of the market. By the end of the day, we got some 32 deals in total, and of course valued at 36.90 billion naira. But we know that a lot of investors and of course dealers, treasurers are really anticipating the central bank to come up with some kind of auction, open market operations auction, such that the system liquidity, which is something that they have actually seen at a high level and very, very positive, is something that the CBN will be able to mop up by such an exercise. Chimeze.
All right, let's retain that optimism, as today is the last trading day for the week. And I can say, thank God it's Friday, Temple. All right, that's a wrap on the show for today and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwagu.